All right, hello and welcome to the weekend video from bullwaves.org. As always, we're going to go through the 9 markets from medium-term charts down to short-term charts, or 4-hour charts down to hourly charts, if that's the way you want to look at it. It's Friday. It's now 6 o'clock over here in Ireland, so the London session is closed. I think I'm taking a new tack here. I'm going to record the video after the London session, and whatever happens from here on out on the other side of the Atlantic, I'll just have to put up with, because I've explained it before. because. Okay, so an interesting day all around, I think, in the markets. So without further ado, let's get into it. Oh, by the way, I hope you enjoyed got some use out of it. Enjoyed the free access week that I ran on the site this week. Anyway, so there'll be another update tonight, obviously. It'll probably go out around the same time as this, so it won't make any odds. So we're looking at euro dollar. That's the hourly chart. Let's get the 4-hour chart. So what I'm watching right now is the big question is wave 2 finished at the recent high, or is wave 2 tracing out a larger correction? The larger correction would be something akin to 3 waves up in a possible 3 waves down, and then a 5 wave C wave, something like that, and then you'd be targeting about the mid-19s, 119, for that wave 2, that larger wave 2 to complete. That's still very much a possibility, as shown on the hourly chart here, and that's the hourly chart. So you can see the alternate count there shows a wave A, wave B, and a possible wave C. So that's something to keep an eye out for next week. So we have 5 waves down and 3 waves up. So the next move down is to the downside, and we got the beginnings of that today. We had a nice trend channel, 3-wave pattern in a possible wave 2, or you could look at that as a B wave as well. So next week is decision time, really, in the short term anyway. Do we get a simple 3-wave move down back into support at 115 and then a rally in wave C? And that would trigger the alternate count, obviously, but it's still a second wave, and still long term, my eyes are firmly fixed downwards in euro dollar. So next week, I'm looking for impulse wave down, a 3-wave correction to a lower high below 117.22. I think was today's high. Was it? What was today's high? Yeah, 117.21 or 2. And if we get that impulse wave down, then there is a likelihood that you'll get a further acceleration lower. So that would be an interesting opportunity. If wave 2 is complete, that would be an interesting opportunity to the downside. Okay, so let's get to pound dollar. Okay, similar situation in pound dollar, and I'm going to say okay about 400 times today. But you're getting used to that at this stage, so that's just me. I think we could have an ending diagonal wave C complete there in wave 2. And we are up around the area where you would expect wave 2 to complete anyway, given the fact that we have a nice trend channel. We've hit trend channel resistance, and today we took a nice spike lower. So let's get to the hourly chart. Reasonable shot lower off the high. There's the ending diagonal possible wave C. So we're looking at wave A in brown, an expanded flat wave B, and then 5 waves ending diagonal wave C. So that may complete wave, the larger wave 2. The alternate count is similar enough to euro dollar in the fact that we may well see this C wave extend further up towards the initial resistance line at around 132.90, so 133 and change. Right now we're at 130.70 as the market's closing. So I suppose the same situation holds for next week. If this decline continues in a 5-wave pattern to the downside, and we get a 3-wave correction in wave 2, well, then you've got an impulse wave and a possible bearish signal. The trigger point, I suppose, for or let's say the initial confirmation point that that wave 2 is complete is if we get a run below wave B again. So that'll be 127.84. And if we get a kind of an impulsive move below wave B, well then, yeah, you're pretty much, there's no guarantees in life, but you know, we could be safe in the knowledge that we're moving down into a large degree third wave. Okay, so that's pound dollar. Let's get into dollar yen. And we've got a nice move up in dollar yen again this week. So since that has happened, the odds of the alternate account are declining. Still can't rule it out because we haven't broken the kind of upper resistance there at 113.17 yet. And this kind of the rise, however encouraging it is, it hasn't accelerated in any kind of let's say interesting or expected manner yet. So we still have to keep an eye out for that alternate account. So here we can see the kind of a couple of alternates really. You could be talking about a wave A down into this recent low. Let's go to, actually, it's the 4-hour chart to show that it could be an A wave down, B wave up, and a larger C wave down back into 108 again. That's a reasonable alternate count. You also have a bullish count at 1 degree higher, which is green labels there. So wave 1 and 2 rather than in green, rather than wave 1 and 2 in brown. And also, this is the alternate count. A B wave high may be developing right now. So, you know, we have you could slice this cake a few different ways at the moment. I was thinking about a triangle B wave, but that was ruled out today with a break of the previous, or the initial resistance at 111.83. And we got a nice push up towards the next resistance, which was the previous wave A. So 112.14, that kind of halted the price rising so far today. So the bullish way of looking at this would be wave 1, 2, 1, 2, and maybe a 1, 2 again, and a further acceleration up in a third of a third of a third type of scenario. The other way of looking at this is that we have, say, 3 waves down complete in wave A, possible 3 waves up in wave B, and then we get a 5-wave move down in wave C. Longer term, I'm still bullish on dollar in general across the board, and not because I I love the Federal Reserve, or I have a great admiration for government-run currencies at all whatsoever. It's, well, the pattern kind of speaks to me this way, and the fact that I expect a very large market collapse and debt collapse in general. So the credit contraction that I do expect should drive the dollar higher, because the dollar is the largest debtor currency on the planet. And when debts are called, or when debts become due, people run into dollars, and there'll be kind of like, you would expect a very large kind of short squeeze on the dollar. So there'd be so much kind of say flight to safety and flight to dollars to pay debt that it would just drive the currency higher. And I think it would be kind of independent of what the US government would do at that stage. And they may even look at it as a good sign, and they may even take advantage of it. And I think it would be their undoing in the long run. But anyway, that's too far from here to be kind of contemplating at the moment. The market crash is not too far from here, but government policy is I hate even talking about government policy. I just hate government in general. It's the necessary evil, and I try not to waste time talking about it. And here I am talking about it. Okay, let's move on. This is stocks. I'm still going with the wave 2 interpretation, and I still think it's the best interpretation. I don't think the a lot of people have a triangle pattern going on here in the Dow that doesn't, for me, that doesn't fit, because you would have to count this as a C wave, or sorry, yeah, a C wave, and C wave should not break the low of an A wave, and this bar here did break below the initial decline, so that, for me, that counts out a triangle in the Dow. The triangle in the S&P did count correctly, because that C wave did not break the previous low back in on the 9th of February. So anyway, that explains that, if you can follow it. So I am still expectant, and I'm still, let's say, of the opinion that the Dow has actually topped. I think the NYSE composite index also topped on the same, more or less the same day, back in late January there, and I don't think the NYSE and the New York composite actually got anywhere even near to where the Dow has gotten. And again, you could talk about the internal technicals of it as well, because this rally is very weak. It's a very kind of a narrow rally, based around a couple of stocks, and the fact that that is happening it's kind of very indicative of a C wave. So I'm sticking with the wave 2, 1-2 correction, and I am looking for again an impulse wave to the downside to lead the way down into a large degree wave 3, and the beginning of well, technically this bear market has already begun, but the beginning of the acceleration lower in the bear market. Okay, so that's the 4-hour chart in the Dow. The 4-hour chart in the Dow, and I didn't even speak about the 4-hour chart in the Dow. So this is the hourly chart here, and that's that wave, possible wave 2 high. We kind of pipped above resistance over the last couple of days. Initial resistance, that was 26,167, which broke the previous count, which was a 5-wave decline with an expanded flat. So second wave, but obviously that broke, so we had to change that. And I think that an ending diagonal is a decent way to look at this. However hard it is to call 3 waves in this particular wave 1, we have 3 waves in wave 2. Again, possibility of 3 waves in wave 3, 3 waves definitely in wave 4, and good possibility of 3 waves in wave 5. So 5 internal 3-wave patterns, counting an ending diagonal in wave 5 of C of 2. So we've got another spike lower this evening, which is encouraging. But again, we just have to wait and see on this front. We want a clear 5 waves down and a clear 3 waves up. And you know, I do get a lot of slack for this, and obviously, I'm sure there's people are listening to this right now and kind of shaking their heads at me and thinking that I'm just a perma bear, and you know, there's no there's no saving me. Okay, well, you can think that, and you can you can think that while you're queuing at the ATM trying to get your cash out, and I definitely won't say I told you so. Okay, so I think we could be talking about an ending diagonal here. Obviously, the first sign we want to see is a break of 4th waves and 2nd waves. So previous 4th waves and previous 2nd waves at about 25,740, and previous 2nd wave about 25,603. So if they break, well then, you know, we have another indication that a turn is underway. So let's look for next week an impulse down with 3-wave correction higher, and at that point, you know, we'll call it as we see it, eh? All right, let's move on to gold. So the 4-hour chart of gold, we're looking higher. In general, the pattern is kind of pushing our way eventually. You can see we haven't had a break, a moving average bullish break yet, but another push higher, and that would do that, I'd say. in a third wave up. We could very possibly get that next week. There's a couple of ways you could view this particular pattern off the recent high, and we'll get into that right now. So this is the hourly chart. We've had so far a three-wave decline in a possible second wave. If that recent low 1187 holds, well then, if it holds and we get a further move up and break resistance at 1217, this 1217 level has held now for the last 4 or 5 weeks now as the kind of initial trigger point for, let's say, a kind of a bullish outlook. So 1217 remains the level to watch in the short term. We got a break at 1207, which I was looking for during the week, and it looks like a 5-wave pattern to the upside, and 3 waves down. So if we hold 1187 and get a further break of 1217, then we've got a bullish confirmation, 2 degrees of impulse waves to the upside, and a possible rally upwards in a third wave. And if that's the case, well, then I think we can pack our suitcases for quite a long rally up. The other way of looking at this is a larger wave 2. So we could be looking at let's say an A wave down, 3 waves up in wave B, and then maybe a 5-wave pattern down to complete wave C of 2 again. And that would be the alternate count if 1187 breaks. I'm quite well, you know me, I've been bullish for a long time on gold, but I'm quite hopeful that this will result in the action that I'm looking for to the upside. Okay, let's move to crude, and we got quite close this week on to the initial resistance line and triggering that alternate count, but so far we've held. The action today was again in line with expectations, even though the previous rally over the last couple of days stretched further than I thought it would. And we still have to see a break of initial support to kind of, let's say, to switch focus to kind of trigger the downside wave count and switch focus firmly down in a possible third wave. And it's either a third wave in brown or a third wave in blue here. And I think I'm going to switch to the alternate labeling, whether or not, well, I say, I have to explain myself again. I think I may switch to the 1 degree higher in the move off the high there, because I think it might fit the action a little bit better. Okay, but anyway, that's neither here nor there. Let's get down to the hourly chart, and that's the decline over the last couple of days, which took out the previous wave A high, which was at 68.52. So that would be kind of what you'd be looking for a turn back down into a third wave. So we broke initial support. We have to get a break of B wave, the B wave low here, and then obviously the previous wave 1 low. So we're still looking at a 1-2 pattern, and maybe even a 1-2 completed at today's high. Excuse me. It's cold and flu season, and we've got colds and flu plenty in this house. I'm sure you can probably say the same in your own. So the other obvious way of looking at this pattern, because it's always good to keep an alternate, obviously, and I'll stop saying obviously now. So we could have a 5, 3, and 5 larger B wave unfolding here. It's possible. Today's action kind of points more towards the bearish pattern than kind of an elongated correction higher. So next week we have 5 waves down, and we could be talking about wave 2 complete, but this could unfold into a larger 3-wave pattern right here. So what we'd be looking for initially is a break of these previous lows, and obviously if 66.70 goes then in an impulsive fashion, well, then we'd be looking firmly to the downside. Break of key support 63.95. That happens next week. Well, I think we're on for a larger rundown then. Okay. Obviously, we'll be tracking that every night as it happens. We'll see what happens. Okay. Here's the S&P. Again, we got a break to a new high and a corrective pattern off that high. We haven't broken the previous. We haven't broken that recent high yet in the previous counter trend rally. So it still stands as 5 waves down, 3 waves up, with a possible rundown into a third wave expected. That recent high was at 29.16 or thereabouts, and we haven't broken that. It's held so far. We've got a 3-wave pattern within a trend channel, and a kind of a decline from a slight break of that trend channel, and a decline again this evening in a possible wave 1. So we've got a nice support level there at the previous wave 1 low, which was 28.63, and that's what we're kind of looking at. 28, or we're at 28.98 tonight. So early next week, if we get a break of support, initial support 28.63 in an impulsive fashion, well then that would definitely add to the idea that the top is actually in place in the S&P. The alternate count is a little less viable, I think, right now. On the only other way of looking at it is this alternate count here is an ending diagonal within the larger degree wave 5. So 1, 2, 3, 4, 5, and where the wave 1 high and wave 4 low overlap. If the ending diagonal is in fact the case for wave 5 green, well then you would expect a break of that 29.16 high again, and so a completion of that ending diagonal, and it could happen in an ending diagonal itself. So if that's the case, the only way to view this corrective pattern while getting another high would be as an ending diagonal again. So we'll see how that unfolds. I'm kind of thinking on my feet here at the moment, and I'm kind of I'm chopping and I'm tripping over my own tongue here at the moment. Okay, so early next week, again, as with the Dow, impulsive move to the downside, and I'll be saying that until it happens. Okay, righty, let's move on to silver. Silver hasn't had the kind of positive move up that gold has had off the recent lows, but it's still very possible that we have 5 waves up and 3 waves down, and the only way to well, let's get into the hourly chart really. The decline looks to have completed in 5 waves, so that's wave C here that you're looking at, the final leg down here, and that wave C is in 5 waves. Wave 1, 2, and then an extended wave 3, 3-wave 4, and then 5 waves down in wave 5. And we got the low we were looking for this week, and we got a 5-wave move up off that low. So again, it's a shallow move so far, but it can be viewed as a 5-wave pattern. The way you would view that as a 5-wave pattern, if we just kind of explode that a little bit, you could see wave 1 up, expanded flat wave 2, wave 3, then you get an expanding triangle wave 4, and then that little push up into the previous third wave low, 1433 yesterday. That was wave 5 of a possible wave 1. Let's get rid of that mess for the moment and get back into the chart. Okay, so if that's wave 1 up, we've had it's a nice 3-wave pattern to the downside. So that's definitely it's definitely in favor in the short term of the bullish outlook, but I do want to see a larger 5-wave and 3-wave decline develop to give us a kind of a more assured footing for a turn up in silver, and a break of the previous 4th wave high there at 15 will will be the signal that we'll be looking for the long-term kind of run-up in silver as well as gold. So for the moment, we have a possible 5 waves up and 3 waves down off the recent low at 1394. Okay, so next week we'll be looking for that to develop into a larger, at 1 degree higher, five waves up at 1 degree higher. Okay, let's move on to Treasury market. So this is a 10-year Treasury note, and we have 5 waves down, possibly complete at today's low. Actually, now that I look at it again, we were looking for a decline today. Got the decline. We got a break of 119.27, which is that previous third wave low. So that was the initial say minimum target for wave 5, and we got a nice break of that. Price is bouncing slightly again this evening, so we may well be talking about wave 2 being underway at the moment. And if that's the case, well then, let's get 2 in there. If that is the case, then we'll be looking for a 3-wave corrective rally next week into wave 2, and initial resistance lies at about, well, you're either looking at the previous 4th wave, which is 119.56, and I expect it to probably rally higher than that. The previous wave 1, 119.85, and that's about the 50% retracement anyway. So you'd look for the price to come back up into that long bar there. So 119.85, possible 120 for a correction into wave 2 in 3 waves, and that'll give us an impulse wave, complete impulse wave off the previous wave 4 triangle high, and that'll be a good indication that this market has turned. Now, if that's the case, if the market has turned, then we're looking at a kind of a longer term decline in bonds again. Okay, so that kind of completes this week's roundup. I hope you enjoyed the week, and I hope you enjoyed the video. Not my usual humorous self tonight for some reason. I'm all business. So for next week, we have our eyes open. Turning point again, looking at a turning point in stocks. And that'll be the focus for next week. Okay, so I wish you all a nice weekend, happy and healthy and safe weekend, and we'll see you all on Monday evening. Thanks so much. Bye-bye. Godspeed.